I'm Matt Schubert with Planned.
Hi, I'm Ian Murdock with Mortgage Trust.
Great to see you, Ian. Today we're talking about reverse mortgages. I know you're an expert on this, so I'm really excited to talk about this, learn a lot more about it. I'm relatively familiar, but I don't know a ton about them. So first, most basic, obvious question, I think, what exactly is a reverse mortgage?
Yeah, that's a good question, Matt. In thinking about what a reverse mortgage is, I think it's helpful to look a little more broadly and think of how we consider debt in our society. We're used to thinking about debt as being a negative thing, something to be paid off, something to be paid down, eliminated. Whereas with a reverse mortgage, you're flipping that and you're accepting the fact that there will be debt on your home and you're going to be okay with having some debt on your home, knowing that it gives you the opportunity for greater cash flow in your finances. So with a forward mortgage, we think of making payments to that mortgage and paying it down over time. With a reverse mortgage, you're not making payments and you're able to stay in the home still, but because you're not making those payments, the balance of that reverse mortgage will increase over time. And so it works in the opposite or reverse way from a forward mortgage. It might be helpful at this point to illustrate that the balance on your reverse mortgage of, say, $200,000 on a $600,000 home, that balance of $200,000 is growing over time, but the value of your home is also growing over time. And so between those two numbers exists your equity. And so your equity, as long as things remain relatively stable in the market, remains quite healthy all the way through the reverse mortgage, because while the balance of your reverse is growing, the value of your home is also growing.
Sounds like the name kind of implies exactly what it is. So when we get into kind of what a reverse mortgage is and who should consider one, I really wanted to touch on what are the kind of main benefits of doing a reverse mortgage?
One of the main benefits is that you no longer have a mortgage payment, that you're able to turn that around and no longer make that payment, but you get the benefit of staying in the home nonetheless. And another of the benefits could be if there's a reverse mortgage line of credit available, then that line of credit will grow over time and give you access to more of your equity. It kind of depends on where each client comes into the picture at the beginning of the reverse mortgage, whether they have an existing debt or whether they're fully debt free on their home. Those will change how the reverse mortgage works. In the case of someone who has a mortgage and wants to eliminate it, the main benefit to them will be the elimination of that payment. Whereas the benefit to someone who has no debt on their home is paid free and clear, the benefit for them will be that they have an open line of credit that they can draw upon in retirement and use that equity as they see fit. So for someone who owns their home free and clear, there are a variety of options that they can use in that with that reverse mortgage line of credit. They can just use it as a lump sum of money to access over time. They can set up payments to be made to them over a certain period of time, or they can have payments made to them for the rest of their life for a certain amount. So all of those are ways that they can use that available equity. And the difference between that line of credit and a home equity line of credit, what we're used to thinking of as a HELOC, is that the reverse mortgage line of credit, while giving you access to that money, requires zero payments. Whereas a HELOC, you're making payments on that amount, that interest is accruing, you're having to pay that interest off.
No, that's great. So you mentioned people that have their home paid off doing a reverse mortgage. Is that a requirement for one? What are kind of the qualifications that someone would need in order to get a reverse mortgage?
Yeah, so in regard to qualifying for a reverse mortgage, having your home paid off is certainly one good element, but one of the primary elements for qualifying for a reverse mortgage is that you qualify on an age-related basis. So to qualify for an FHA reverse mortgage, one of the parties in a couple has to be 62 years of age or older. The other party of the couple could be under 62, say 55 or 50. And as long as the other person is 62 or greater, then they qualify for a reverse mortgage. The calculations are a little bit different for them, but it still works. There's a situation in which someone can be as young as 55 years old and qualify for a jumbo reverse mortgage or a proprietary reverse mortgage, but those cases are a little more rare.
Great. So you mentioned, obviously reverse mortgages, most people, when they think about it, it's a source of income, right? We're no longer paying the mortgage. Now we're taking equity from the mortgage. We're using that income. Are there other situations where it might make sense for someone to consider a reverse mortgage?
So the most common way we think of using a reverse mortgage is for the retiree who is living on a fixed income. They own their home free and clear. They're looking for other sources of income, and they're kind of on their last legs. They're in a more desperate situation. So for them, yes, take out the reverse mortgage. You then have an instant line of credit that can be utilized for making payments to the borrower, or that they can use as a place from which to draw additional money as they need it. That's a use case that is probably the most commonly thought of, and it's the one that Tom Selleck advertises in his TV commercials. But you've also got the other situation where you have someone who doesn't necessarily need more income. They would benefit from not having to make that mortgage payment any longer. So that person could take out the reverse mortgage and increase their available cash flow. It might be perfectly comfortable either way, but it just allows them this flexibility. And then another case might be someone who has no mortgage, has in their mind plenty of assets to draw upon to retire, doesn't feel like they need a reverse mortgage, but that person could take out a reverse mortgage and have that line of credit available and utilize it during certain times when they don't want to draw money from the market. For instance, let's say the stock market has a downturn for a year or two, and that's the last possible time that they would want to take money out of their stock assets. And so they instead take money out of their line of credit assets. So they have this reverse mortgage line of credit that they can draw upon as a buffer asset, buffering those times in the market when the market is volatile.
Wow. So it sounds like this can be used for a lot of different situations. It sounds like a pretty flexible tool you can use in financial planning, regardless of kind of what situation you're in. So I kind of wanted to follow up on that and ask you, are there other situations or someone who might think they shouldn't consider a reverse mortgage that you think might actually benefit from one? Are there other strategies they might potentially use?
Yeah, so I mentioned the sequence of return risk, or the time when the reverse mortgage line of credit can act as a buffer asset. So definitely that can be a way of drawing income during times of stock market downturns. So someone who has a portfolio of assets that they're drawing upon in retirement, they might look at the reverse mortgage and say, I don't need that. But I've illustrated one way in which they might utilize that, which is the sequence of return risk, using it as a buffer asset. But the other way that that person or couple might use the reverse mortgage is to have access to that money at all. And without having the reverse mortgage, that money is inaccessible as equity. So having access to that money could allow that person to bestow gifts on family during their lifetime, or spend money on a family vacation of some sort that allows them to have a rich experience with their heirs that might not otherwise be thought to be possible. So I feel like it's helpful for people to at least look at this as an option. The other aspect of this that we haven't even touched upon is the fact that the reverse mortgage line of credit grows in availability over time. So if someone takes out that reverse mortgage line of credit at age 62, and then they don't utilize it until age 80, that's had 18 years of growth potential at the interest rate of the reverse mortgage. That could be the difference between a starting $200,000 line of credit that might grow to $500,000 or $600,000 by the time they're 80. So they get that availability increase just by nature of the way interest works and compounding over time. So another way that someone who's financially comfortable, doesn't think they need a reverse mortgage, might benefit is that by using the reverse mortgage, eliminating that mortgage payment, they could conceive of retiring earlier than they would otherwise have thought possible, because all of a sudden they don't have this one debt in their profile that is needing to be satisfied every month. And it frees up that cash flow and makes it so that maybe they could even consider part-time work or even retiring. And another way that it could be beneficial to someone is we all know that it's beneficial to delay your Social Security benefits until you're age 70 in most cases. Not having a mortgage payment any longer could make it easier to do that.
Definitely a lot of ways this can be utilized. We've talked about a bunch of different benefits of it. I know this will be a question that a lot of people would have. It's a question that I'm curious about. How much does a reverse mortgage typically cost?
Yeah, that's a good question. Yeah, there are closing costs involved in a reverse mortgage, just as there are in a forward mortgage. The closing costs in a reverse mortgage are somewhat larger, though. The main difference with a forward and a reverse mortgage is that a reverse mortgage has a mandatory mortgage insurance premium, and that's an FHA mortgage insurance. And FHA mortgages are the bulk of the reverse mortgages that are offered. And the FHA mortgage insurance premium would be 2% of the appraised value of the home. So if we're dealing with a $750,000 home, that's going to be a $15,000 charge as a closing cost. That's going to be the lion's share of the closing costs in doing a reverse mortgage. Lest one think that that's just wasted money, that money goes into an insurance pool that essentially makes the reverse mortgage possible in the first place. It's only by having that insurance pool that lenders will feel comfortable issuing reverse mortgages, because there's such a risk involved in not knowing where the market will go over time. You're insuring something for 30, 40, 50 years into the future, and having that insurance backstop allows for FHA to come in and deal with certain situations that may occur in the future, such as someone being upside down. And maybe by the time they've had the reverse mortgage for 45 years, maybe the reverse mortgage balance is greater than the value of the home. We don't know what's going to happen with home values or interest rates over time, but this insurance acts as a backstop to protect lenders. So that's a long way of saying that that part of the closing costs is quite justified when you look at it that way. Those other closing costs are going to be an origination fee capped at $6,000, so it can't be greater than $6,000. And then your title, appraisal, other kinds of fees, those generally range between $3,000 and $4,000. A person who has a $750,000 mortgage would be looking at that $15,000 mortgage insurance premium and maybe around $9,000 or $10,000 of other closing costs.
No, that's great. This has been extremely insightful for me, and I'm sure a lot of other people. I've learned a ton about reverse mortgages. Ian, I really appreciate you coming on and talking to us and giving us all this valuable information. If anyone has any questions, wants to learn more about reverse mortgages, or might be interested in one, you can reach out to Ian. Or if you have any financial planning needs, you can reach out to myself. All of our information is down below. Ian, again, thank you so much for coming on. It was really great talking with you.
I agree, Matt. It was a great conversation, and I hope that it helps people to understand more about reverse mortgages. I know it's a complex subject, but I hope that this has helped to make it a little more simple.